And welcome. This is Mary Ellen McGonagle here with your Friday afternoon MEM Edge show brought to you from the East Coast in Connecticut. Lovely weather here this weekend. As usual, this is the show that brings you where the action is in the broader markets. And we certainly had a bumpy ride this week. We did hear from Trump last Friday that he was on the verge of potentially raising tariffs in the EU by 50%. Now, we did get news on Monday, of course, that was delayed. Very good news. The markets rallied on that. We did see volatility fall. We're going to take a look at that. And then, of course, NVIDIA reporting their earnings. We will look at NVIDIA and the impact that that's had on the broader markets. Q1 GDP numbers, they came in a little less than expected. So that was good news. However, there was other news relating to inflation. And that data there also came in a bit mixed. So the primary real movement in the markets continues to be driven by headline news surrounding Trump. And we'll get through that as we move through today's show. I will share that with you. And next week, we will get those May employment numbers, both on Wednesday with private employment and then broader employment numbers on both Thursday and Friday. So that will be of note. We don't have any major companies due to report their earnings. There are several companies, but nothing that is market impactful. So let's go ahead from here and take a look at these broader markets and beyond. First up, we are looking at a daily chart of the S&P 500. And you can see this is that volatility that we experienced as the week progressed. We also can note that the S&P 500 did close back above that 10-day simple moving average. We have a positive RSI and positive MACD, keeping that near-term uptrend in place. And I can say the same for the NASDAQ as well. From here, we'll go ahead and take a look at the underlying sectors. We're looking at a 2-month daily price chart view, sorted by relative strength. You want to be fully aware of where that relative outperformance is shaping up so that you, of course, can take advantage of that. So we have the S&P 500 sitting up here at the forefront. This is your stronger area. And then beneath or in front of that, we do have technology. Technology did have another good week last week. XLC, a lot of that having to do with Alphabet. XLI sitting up here at the forefront. And I will share with you a group in those industrials that is outperforming. Why, and also a couple of names in that area. We do have consumer discretionary XLY. It too did outperform. I'm going to share with you some of the dynamics shaping up in that group, as it is the most recent sector that is continuing to have underlying companies report their quarterly results. XLP is, of course, consumer staples. And I did share with you last week, for those of you who did not see the show, I talked about the concept of having some weighting in these more defensive areas, such as consumer staples. Volatility is alive and well, certainly with Trump headline news driving the market action. Also, utilities closed solidly for the week, another defensive area. And then in financials, I can tell you that it was primarily insurance, certainly a more defensive area than the economically sensitive banks. And then down here, energy in this area has been in the bottom as it relates to relative performance, as we are seeing the price of oil being reduced, among other dynamics, that is causing that area to be down in that weakest quartile. Next up, we're going to take a look at some ETFs that are very exemplative and powerful as far as keeping you, again, on top of that relative strength. And this is moving beyond those sectors. The ability to drill down beyond that is going to be really helpful. Bill O'Neill, who I worked with for many years, did an extensive study going back over prior market cycles And he had determined that the sector and industry group affiliation accounts for almost 50% of your stock's appreciation or depreciation. So you do want to stay on top of that. Again, relative strength indicator and in descending order, a 2-month daily price chart view. We do have that NASDAQ up here in the forefront. It has outperformed all about technology. Also, retailers and discretionary up there at the forefront. As we move through, here we are with XRT, that S&P retail ETF sitting up here. It did pull back as we moved through the end of this week, and I'll share with you some of those headline news that came out with numbers last week. And then IHI, it's been a little divided, but you can see this week a lot of chop, but generally net back and fill, so that we did end the week mostly flat. As we move through, again, you do want to be aware of some of these growthier areas that had really lent their performance to, for instance, technology. Here we are with semiconductors, SOXX, and the group did advance this week, certainly following last Friday and the deterioration that we saw into last Friday's close. And you can see just an awful lot of bouncing around toward certainly today, but net, we did see improvement in that grouping. And then also we can take a look at gold, because this is an area that fares well when that uncertainty re-enters the market. And you can see this is GLD, the ITF, and it was down about 1% for the week, a little bit of vibrancy into the close. Today was unusually quiet, although into that last hour, we did see some movement, which I will share with you with an eye toward going into next week. Also, again, you do want to be aware of these weaker areas and housing. This is XHB, the S&P Home Builders Group, and you can see this deterioration, a lot of that having to do with that rise that we saw in interest rates recently, but also a general sense that the economy, with those tariff fears re-emerging today, that we could see a slowdown in the economy, and of course, not good news for those home builders. Good news on the front with volatility. This is the VIX, and you can see that we closed here at about 18.5, still rather elevated. However, this range is working well in the sense that we are still seeing some outperformance, again, in select tech areas, companies coming in with good numbers, as well as consumer discretionary. But net, ideally, if we could get that volatility down a little bit lower, it would be certainly less concerning. And then from here, I'm going to review a screen that I shared with you last week, and it has to do with consumer Staples XLP. And this is an area that I wrote about in my twice weekly MEM report last week, added a couple of names from this sector to the suggested holdings list, again, as a buffer. But here we are with that relative strength indicator in descending order. And as you go through this, ideally, you want to be on the lookout for names that have reawakened recently. And quite simply, this 2-month daily price chart can be really helpful. Here we are with LW, Lamb, Weston, and you can see that we are in the potential beginning stages of an advance up toward that 200-day simple moving average. We can also see that MACD now in positive territory with a bullish RSI, another stock that picked up, certainly had a good day today in response to strong earnings. That is Costco, COST, and this is a bullish engulfing pattern. Quite simply, when the stock, if it has a period during the day where it trades below the low from the prior day, but closes above the prior day's high, it is a bullish engulfing candle. We can see that we experienced that back here at the end of January, preceding a nice advance. Super nice volume on today's rally, and we have a positive RSI and a positive MACD. Let's go ahead and take a look at some of these other names that appear to be more recently emerging as far as potentially forming the right side of a base. This is Hormel Foods, HRL. Now, for me, this volatility that seems inherent in the stock would be less interesting for me, this particular name, but more as it relates to trading and the actual performance where we undercut prior lows, closed above these prior lows, and then are potentially again advancing into the right side of a base. Now, from here, as we drill down, you'll see some other names that are beginning to awaken, but they aren't going to be as compelling for me. I did go through these names. Certainly HSY, Hershey had a good day yesterday, but we're just not quite there in bullish behavior quite yet, but we did get a nice black line up through the red with that MACD. So I do have it on my watch list. The stock, when it gets going, can be quite an outperformer. And of course, you'll want to keep an eye on those yields. So as we move through, not every name in this XLP Staples area is on the move higher, but certainly some names. From here, what I did want to go ahead and share with you is a view of the XLP chart. We are taking a look at a daily chart of consumer staples, and you can see that today it was up about 1%, certainly outperforming other areas. And then also taking a look, drilling down a little bit further into this intra-day view with the staples. You can see it had a nice start to the day, rested for a bit, and then rallied mostly into the close. But again, money movement into that particular area. Now, I also wanted to share with you these dividend aristocrats and really just carrying on that theme as it relates to having buffers, or certainly for this volatility, areas that are going to be a little less volatile, but are sitting up here at the forefront. So these dividend aristocrats are companies that have increased their dividend every year for at least 50 years. So they are going to be solid, well-founded companies. And as we move through, I did review this stock last week. This is Procter and Gamble continuing to advance. Also, as we move down, we can take a look. I talked about insurance stocks on the move. This is CB, Chubb, and you can see this nice 2-week base breakout that took place today on big volume. We also had that MACD crossover, positive RSI. A couple of other names that we can take a look at is GWW, and it's really setting up quite nicely. Again, high volume today, and the stock did close the day in the upper reaches of its trading range. The thing that is interesting to me is the fact that the stock does have that ability to outperform if we get that industrial space doing even better. And you can see that, again, it's firmly holding up quite well in a market that is not entirely healthy. And so from here, you can move down and again, be on the lookout for names that are popping, just beginning to move higher, but they are going to offer that nice yield, which can be attractive when the markets do get a bit bouncy. Now, let's go ahead and take a look at an area where there were earnings this week, and that is consumer discretionary. That's the area of the markets that is last to release their earnings each and every quarter. So I did want to share with you a couple of names in that space that reported this week. First up, we are going to take a look here at Gap, major retailer known to be in pretty much every mall across America. And what I wanted to highlight is the fact it did drop 20% today. Now, this is something that in prior shows I have pointed out to you, this concept. First up is the fact that Gap had a very sharp advance from this $19 up to $29. And then also the fact that we had an overbought condition going into earnings. In other words, the stock was pretty much priced for perfection, so that any kind of news that was not fantastic, the stock got walloped. And that, in fact, is what took place here. You can see this sharp drop in response to their outlook. Growth going forward was not as strong as anticipated, and the stock fell out of bed. Also, we can take a look at a couple of other names that had different to the positive side as it relates to response to their earnings. Ulta Beauty the cosmetic and beauty goods firm that has a lot of brick and mortar stores and also an online presence. And the company did come out with good numbers. Some of you may remember that Berkshire Hathaway did add the stock about a quarter or two ago to their portfolio. But let's take a look at what took place. And this is another name we're going to take a look at that had very similar price action, where the stock did trade up as high as 494, and then it did fizzle into the close on very high volume. Let's go ahead from here. We're going to take a look at an intraday chart of Ulta and share with you some of these guidelines that you can use, because you would not be alone if on that gap up into the open, it's exciting and you advance, perhaps dip your toe in. Now we can see since then, or subsequent to that, this is a 15-minute intraday chart, and the stock pulled back very orderly to this 470 level and had a back and fill formation. What I wanted to point out to you is the fact that the RSI and the MACD stayed in positive territory, and the stock closed above the 5 and 13 simple moving average. So you are still sitting up there fine if you did buy it on that gap up. From here, we can go ahead and take a look at a 1-hour price chart and get a little more refined view. And here we are with that huge volume. Also of note is that your highest volume bar is on an upward price bar for that 1 hour. That's good news. And then again, this pullback is quite a bit more orderly, and you can see that we could in fact continue to see an advance once it digests the still relatively big move. From here, we'll go ahead and take a look at a competing company, e.l.f. Now, they're not exact competitors. They don't have brick and mortar stores, but they do have cosmetics, very much in different drugstores, online with Amazon, in Target, and so on. e.l.f. Beauty, e.l.f. And I wanted to highlight, this is on Thursday, that gap up on earnings, and again, that fizzle into the close. It was up about a little more than 0.5% today. Again, high volume on that Thursday gap up and a nice continuation rally. So from here, I'm going to pull up a weekly chart on e.l.f. because I want to highlight for you the advance that is the stock is capable of, and why this took place and why we're seeing this nice advance on that weekly chart. So you can see from that mid-22 period, this of course was a very difficult period for the broader markets, and the stock had a tremendous advance, pulled back into the end of 23, and then again another advance. But what I did want to highlight for you is the fact that during these advance periods, oftentimes it will be during a period where their earnings growth, we did see triple-digit earnings growth for several quarters, 73% and so on, year-over-year earnings growth, just pushing the stock to new heights. Now, what happens eventually with these winning stocks, this is something I've studied a lot, is the fact that when you have several quarters of these strong earnings, and we can certainly use this period as an example, oftentimes what will take shape is that the company, even though they are continuing to put out good numbers, they will come up against tough comparisons on a year-over-year basis, and the stock will falter. And that is exactly what took place here. This is taking us back from Q4 last year into the beginning of this year, and the stock really fell out of bed. And we also can note that they had good numbers, but just relative to prior performance. So at this point in time on the weekly, you can see this sharp advance. Now we are up a good 34%, but we are also coming out of an oversold position on e.l.f. The advance is still relatively early on this weekly, so I would urge you to put it on your watch list because it appears to have further upside potential as their growth is now coming into a period of a bit easier year-over-year comparative, and it could advance further. One other area I talked about in industrials that is on the move higher. Let's go to that initial interface page here on stockcharts.com. com, I'm going to take us to the sector drill down. And from here, we're going to look at the industrial sector. And this is something that we will also do with REITs very quickly to assess that strength. And from here, we will go ahead and pull up that 1 week. So over this past week, we can see where that outperformance has been. And what I wanted to highlight is the fact that aerospace names are sitting up here at the forefront, as are defense. So aerospace. Now, airlines also, but you're going to want to key in on that Stockcharts technical rating and be aware of those, certainly 99. That is the highest, of course, that you can get. We'll take a look at that chart. Really, you also want to key in on those names such as defense that are sitting here at about 74. We have heavy construction at about 82. So you're going to have a lot more to really drill down into because they have not already exceeded and advanced. But we can take a look at this aerospace industry group, and you'll see this very sharp advance that has taken place. We'll also go ahead and pull up a weekly, and we do still appear to have further upside potential there. But this, again, is all about Trump and headline news. He did announce 4 weeks ago that he is anticipating a huge bump in defense spending, certainly going into next year, but even before then. So that in turn has pushed this group up. There is a name on my MEM Edge report that has been participating and still looks quite attractive in that aerospace and defense area. Also, I'll share with you, this is a little bit smaller that is sitting up here quite nicely, ESLT, Elbit Systems. And you can see it's had these downdrafts into a rally, and it has taken shape here several times going back to this peak in price back here in March. So on the overall whole, on the lookout for a potential base breakout at about this 425 level. And you can also see this nice pickup in the volume over the last week, indicating institutions could be becoming involved. And then also we just now have that black line up through the red with that MACD crossover. Another defense related stock that came out with earnings this week. Heico, HEI is the ticker symbol. Take a look at this nice gap up in response to strong numbers, a nice continuation rally, and again, nice high volume on that gap up. That's giving confirmation that a lot of interest in the stock. From here, I'll go ahead and pull up a weekly, and you will see that the stock broke out of a nice lengthy base, nice double bottom formation, RSI and MACD relatively early in their advance with that nice high volume bar. That's it for this week, everyone. Have a fantastic weekend. If you haven't already, go ahead and use that button below to trial my twice weekly MEM Edge report, keeping you on top of sector rotation as well as broader market sentiment. And you will want to go ahead and hit that like button so that you can be alerted to upcoming videos. And I'll look for you here again next Friday.